to the first session of our technical series, which is focusing mainly on the processing and production. And before I introduce the topic and our speaker, I'd like to remind you that the program is being recorded and we are coming to you live from Facebook Live, YouTube, and also Microsoft Teams. For your Q&A, if you have any questions, please use the Q&A feature at the bottom of your screen. And then you can also use the chat for networking. It's coming to you also in English with translation into French. So at the bottom right corner, you will find the interpretation feature, and then you can select the language of your choice. And you even have the possibility to mute the language of the speaker so that you hear only the language of your choice. Let me also take the opportunity at this stage to also recognize organizations that have also made it possible for us to hold this session today. We have SNI, Sustainable Nuts Initiative. We have GIZ Cashew. We also have Intersnack Procurement, Cashew Info, Pro Cashew, TechnoServe Benin Cashew. And then also for the sake of this study, let me also acknowledge the Swiss Economic Cooperation Circle. Indeed, the presentation by Shakti will also be based on a study he had done recently for the GIZ Cashew and also the Swiss Economic Cooperation Circle. Now the topic for today is cashew processing economics, global benchmarking, and new trends. So we'll have it in two parts. We'll have the first part focusing on the cashew processing economics, and then we will take a short break to have a Q&A so that people can bring up their questions for the facilitator to clarify them. And then we go into the new trends where we're taking the broma kernels export, what emerging trends are coming up in that direction. And then afterwards, we have a more extended Q&A session to address all the issues that have been presented by the speaker. So today, the speaker or facilitator for this first session of the technical series we have in this year is none other than Shakti Pal. He has for many, many years, starting from Mozambique, all throughout the length and breadth of Africa, been working as a processing expert, supporting in the creation of the processing industries in new countries where processing was never envisaged, and actually also to grow in the African continent, the processing industry. And he's done such a great work and acquired so much experience that we are happy to have him today to share with us his view on how processing is going and how to make the African processing sector competitive. So without wasting much time, I see Shakti's video is on. So I welcome you, Mr. Shakti Pal, and please, your audience is ready, and you can take us through cashew processing economics, the global benchmarking, and new trends. Thank you very much and welcome, Shakti Pal.
Thank you, Ernest. Thanks for the nice introductory words. And good morning, dear participants. I hope you with your families are doing good, especially in this hard time of pandemic, keeping yourself healthy and fit so that we can win this cashew processing initiative in Africa very well, actually. So I would like to say first, actually, thanks to African Cashew Alliance for their unique platform, which is this knowledge sharing management platform, for having this technical session, which are actually crucial these days for emerging investments in cashew processing. And I would like to also say a special thanks to Cashew for allowing us to actually, they actually participate a lot with the resource management on having this type of outcomes. So without taking much more time, let me start the session. Give me a second, let me put the presentation. Just a minute. I hope everyone can hear me very well.
Yes, actually, we can hear you.
Okay, that's great.
Very good.
You know, Africa actually wants to speed up the local processing of cashew nuts, and we seeing it every day whenever we are actually traveling any part of Africa, West Africa, especially on those countries which grow cashews. We always hear lots of things happening, lots of, even at the airports we talk about cashews, and it's a very hot topic. And various governments in these countries actually created provisions for policy environment which are very conducive to local processing. They are imposing export taxes on raw nuts. They are granting new incentives to entrepreneurs, investors who process cashew nuts or entering into processing stream. And as a result, there have been a noticeable growth in cashew processing investments, and especially in West Africa. Although less than 12% of raw cashew nut produced is currently processed, there has been an exponential increase in the quantities processed locally over recent years. So when looking at the quantum of processing, hello?
Hello, Shakti.
Yes?
I think there's a hold up with the translation.
Okay.
Can you hold on for a minute?
Sure.
Yes, kindly go on Shakti, yeah.
Okay. So the translator is there?
Yes, Shakti, the translation is working right now. Please go ahead. Thank you very much.
So when looking at this quantum of processing investments, it seems that by 2028, Africa will be a significant player for US and European supplies for cashew nuts. It is estimated that Africa will process 17% of world production by that time and secure over 35% of market share for kernel exports. But this growth is not uniform in cashew producing countries in Africa. Not all African countries which produce cashews have the same dynamics on processing. Some of them are doing great, whereas others are still struggling. So today's topic is focusing on cashew processing economics, looking at country-to-country processing feasibility in Africa and its competitive place vis-a-vis Asian counterparts, which is India and Vietnam. We try to understand that how it is working. And then we will also talk about some emerging trends in processing, which will be crucial for processing scenario in the near future. So for our session, it's a quite technical session, so we put it into 3 different categories. After a quick introductory on objective and methodology, that how we come up with the core indicators, which are actually compared on country-to-country basis. We will talk about the core of this session, which is processing economics in a global context, looking at those countries which are crucial, actually, which are on processing as well as production, and which actually participate in global benchmarking, how they are doing on their economic performance. We'll come up with on the region side. We'll talk a bit on the Eastern Southern Africa, West Africa, and their counterparts, India and Vietnam. And then after a small break, we will discuss an emerging issue in cashew industry, that is Burma kernel exports. So this benchmarking evaluation carried out in quantitative way. It is basically a comparison of processing economics for those major countries who actually participate in global bank processing competitiveness at present. So we didn't actually sample every single country. We just choose those core countries. For this work, we choose a set of peer countries like Mozambique and Tanzania in Eastern and Southern Africa, Benin, Cote d'Ivoire, Guinea Bissau, Ghana, and Nigeria in West Africa, and India and Vietnam in Asia as their counterparts. So what actually we assessed here? So we assessed feasibility of processing opportunity in the medium to long term. So that actually helped us to develop a robust estimation of growth and profitability. At the same time, we assessed competitive positioning of the target countries with respect to existing peers, whether they are in region or global. And that actually helped us to elucidate risk clearly and help develop better risk mitigation strategies. So we didn't include in our evaluation the quantitative part, the qualitative part actually, because on qualitative evaluation, processing at origin, when we say origin, the origin means processing where the cash flows are produced, always secure better position. So Africa is always far better on the qualitative part. Its processing is very much traceable. It's always directly linked with the farmers. It is creating better impact on societies which are producing cash flows, who are selling cash flows, who are living day to day with cash flows. It has a better environmental impact, saving thousands of kilometers of unnecessary voyage of raw nuts from Africa to Asia and then to major markets. So we know Africa is quite better off on qualitative part, so we are not including that part in this benchmarking. The main objective of this study is to understand, our objective is to compare economic feasibility of African processing with respect to peers in absolute cost terms. We would like to see what is our positioning in absolute cost term. Are we making money or we are not making money? And for this, we use the methodology which we used to come up with the 4 indicators. We analyze all peers on key factors such as raw cashew nut, their quality and price. We see how revenue realization of each country, all variable and fixed cost, financial cost, taxes, and profitability. And that was calculated per metric ton of raw cashew nut processed in each country. We created cashew processing business plans for same capacity and the same utilization rate for each country in the peer set. And this comparison is not among various existing models which exist in Africa, which is like in last 20 years, there are a lot of different models was there. But we are actually comparing a selective model which frequently used in recent processing investments with adequate level of mechanization and automation. So ideal is to compare apple to apple, and that's why we choose some specific model and see that how the same models within same performance indicators perform in different countries with different cost structures. So that's the whole idea. So these are evaluated on conventional markets, not on specific specialty market like organic and fair trade. And the key assumptions behind that was that we took 2 different models, one with the 7,500 metric ton capacity and other is 15,000 metric ton capacity. All financial values represented are for plants at 80% utilization rate. That means generally this is achieved by year 3 of the processing, and plant installed with latest proven technologies with adequate automation. We also assume that all the countries are performing in the same benchmarking, and that allows us to compare with apple to apple. And as a result, we come up with different code indicators, which are you can see in the chart on the right hand side, and that we are going to see in next slides from now. So the second core part of this session is so we are going to talk a little bit now on the processing economics in global context. So this is just how these specific countries which we choose in our peer set, how they are performing on the key economic indicators. So with improved enabling environment and proven technologies, African processing is performing better. So people who are in this field from years, they can easily understand that yes, our processing, economics is improving, but still not at par. So here we can see the 2 tables. both tables actually been drawn from both chosen models when they're processing at 80% utilized capacity. And this has some core key performance indicators. Both of the models actually show that scale become an important factor, and minimum break-even volumes in Africa at present is around 3,800 tons, or we can say 4,000 metric tons. That says that investment which are smaller than 5,000 metric ton of raw cashew nut on yearly capacity would have some challenges to achieve the competitive benchmarking to compete with their counterparts. When we say on the investment side, Asian investments like as compared to African investment, for example, if we would like to put up a processing plant with 15,000 metric ton capacity, Africa usually need $5 to $5.5 million to have that capacity. But if we see that in Vietnam, it's around $2 million. And if we see that in India, it's around $2.8 million. That says that Asian investments are 40 to 50% lower than Africa. African processing net profits are higher comparatively, but still they are not that resilient because market have a lot of volatility. We see here Vietnam. Vietnam gains per unit is the lowest. It's approximately, if you see, for the case around $28 till $38 per metric ton. But when we see these small profits on the scale, that overall make a very good profit. Indian profits are limited to the extent of their local markets. Here, the assumption when we calculated the plan, we have an assumption that Indian processors are selling 95% of their product to the local market and 5% for the export market, and that actually gives them a handsome revenue, and that's how they are quite good on the benchmarking. But if we want to evaluate them on the normal markets, which is US and European markets, I think their benchmarking will be among last three on the lower side. Now, if you see the southern crop growing regions such as Mozambique and Tanzania, their processing economics is getting difficult. Tanzania is almost processing is not viable at all. It's not because of the processing economics. It has some different issues that we are going to talk about when we will talk more specifically on Tanzania. It's the same thing happening with Mozambique. It's profitable, but still having quite a lot of issues. And then West Africa, and that actually becomes the first choice of cashew processing investments. Processing is growing fast in West Africa. Only Ghana have a hard time to be profitable in cashew processing. Only plants, if you see their break-even volumes, is minimum 10,000 metric ton. That means anyone who is having installed capacity less than 15,000, it's very hard for Ghana to be profitable. We realize that policy support is so crucial to make any profitable industry. That means the industry needs to be born healthy and care for its initial growth till it fortified. If you try to see any example, we never saw any industry which comes up which was not incubated well, which was not supported in its inception stage, actually becomes a robust industry. And Vietnam is a living example of government strategic incubation support programs. Because in Vietnam, the industry was supported for almost 2 decades, 2 to 3 decades actually, 25 years. And that created the most competitive cashew industry in the world. When I say most competitive, is not all the time in overall competitiveness. I'm talking about the more economic part of the competitiveness. Still, I have some concerns on the food safety and other attributes to this industry. So here in this chart, you see that shows yearly accumulated profit, net profits. And so we put up business plans of each country for this capacity and show how the accumulated profits are behaving year to year. So the cashew processing in Africa needs at least 3 years to have a positive scenario. So we see in the case of Guinea Bissau, Nigeria, Benin, Mozambique, these days, it's actually having more or less 5 years because of off-season supply geography. Only Ghana and Tanzania still, till first 8 years, they show negative profits that we will elaborate in the next slides. But one thing is very important to notice. If we see two business scenarios in Cote d'Ivoire, the business case with subsidy or without subsidy. And we can see that with this smart subsidy of this 400 CFA brings the relative positive outlook within 3 years as compared to 7 years. And that's the question, that how we can justify 7 years without having positive outlook. How we always say there's a problem with the financing, but if this is the case, that's for sure there's a problem with the financing. So policy support actually is one of the crucial things which actually shown time to time that how we build up strong industries. Each region have their competitive advantage. They can build the processing actually around what is competitive. So if we see East and Southern Africa, they have some pros, they have some cons. They are quite good. There is a good policy support. All the countries in that region have export tax on walnuts. Their costs are comparatively lower as compared to other parts of Africa. Quality of nuts, quality nuts in Tanzania is really, really good. They have very competitive electricity cost. They have the processing experience and supportive labor policies. But on the other hand, they fall in off-season geography. That is, the regional policies are quite challenging. Like Mozambique and Tanzania have two diverse set of policy things which always give trouble to each other. High arsenic price, that actually leads to price risk, and then long payback periods. But when we talk about West Africa, which actually falls into northern supply season, that means where 85% of the world production comes in, they fall into that geography. They are the biggest producer of raw cashew nut. Almost 45% nuts come from West Africa. There's a increased willingness to bring policy support to incubate processing in each part of West Africa. There are a lot of investment incentives that are shaping up. Their cost of processing is quite moderate, and increasing scale will help in near future to actually realize byproduct revenues. And support service also increased availability, helping. These are the strong points for West Africa, but in West Africa we also having some issues, which is two diverse regional policies, lack of appropriate sector policy, except Cote d'Ivoire. Some countries have good policies, some countries started some small policy reform, but not adequate to incubate a healthy processing. Still facing a lot of challenge on post-harvest losses, high electricity cost, and access to finance. And on Asia side, they are sitting on still unutilized installed capacity. There's a need to do some investment, though only for the mechanization, but still their installed capacity is quite big. They have protected markets in India, or if you talk about Vietnam, they have very good access to market because 89% of the world actually getting kernels from there. They are quite competitive on processing cost. They have very flexible supporting policies and short-term inventory state. But they are highly dependent on imported raw cashew nuts. They are also facing some challenges on quota policy in Africa to support African processing. It's quite long value chain that dilute traceability, that is having a bad impact on the environment, not that much of transparencies, having some issues with the labor cost increase. So it's not that like it says that every region have the basics on which they can use those basics and build up their industry in the future. As we know this, with this Vietnam and India with low risk status, they are in a position that they can easily come up, they can take more bigger risks. And that's why they are the price takers. And they can impact African processing, especially with low margin countries. Like, because their revenue realization is quite high with the local markets or established markets, by-product revenues. They have improved liquidity because of local markets in India, and Chinese market is giving a lot of quick liquidity to Vietnam industry. Their inventories needs are quite short term, 3 to 4 months inventories that lower their price risk, quite competitive cost, competitive industry environment, and their risk-taking capacity. And that can allow them to go predatory buying. If they see that they are losing the share of their business, they can take bigger risks, they can go for predatory buying, and that can be a challenge for African processing. So African processing will keep facing challenges with high volatility in the future, not for every single country. Cote d'Ivoire is quite strong. Guinea Bissau is getting stronger now. But in medium to long term, African processing will improve on processing volumes and capture significant part of world market. So this slide is showing a global value chain share. And here we can see that how in 10 or 20 years, which is actually not that big time for industries, how the things change. How from 1998 to 2008, India lost their production from 45% to 23%. And it is estimated that by 2028, they will be, their production part will be 17% of all global production. And that's how we see on the production side that how Africa from 29% grows to 54% in 20 years. And now next 10 years, it is expected to have around 61% of the global production. It is interesting to notice that India with 69% of their processing share reduced to 41%, where Vietnam improved from 15% to 50% in just 20 years. And when we see the supplies market share, how Vietnam captured from 8% market to 84% market share just in two decades. And if we see 2020 figures, Vietnam actually have 89% of the market share. If we see next 10 years, it is expected by 2028, Africa will be a significant player in the market side, processing 17% of the world production and capturing 35% of the world markets. When we say markets here, we are not talking about India as a market. India is the biggest consumer, but when I say market here, it means anything else than India. That's the market. And so this country actually came on that market definition. So let's have a look on Eastern and South Africa, how the countries in that region are doing on their economic performance. So Eastern Southern Africa is an off-season supplier nowadays, which is more favorable to Asian processors economics. So southern crop, when we say southern crop that produce nuts in September till January, which is considered these days an off-season supply for Asian processors. And by that time, Asian processors are out of the stocks. They import more nuts to process, and that comes from only southern region. So there is a continuous decrease in southern crop share with respect to global production of location nuts. And it is expected that that will reduce more in the future. So it is not that the southern crop is squeezing. Actually, it's a northern crop is actually booming very well. And that's the cause of this shortage, this share. So we can easily see in the graph that in 1996, the southern crop used to be around 32% of world production. And by 2007, 2008, it reduced to 25% and then further reduced to 18% and 17%. I'm pretty sure in coming 5 years, it will reach by 16 to 15%. And again, it is not because production is reducing in this geography. Actually, production is increasing in other parts of the world. So that have, because and more it is decreasing, more and more this geography is becoming off-season supply. More and more the nuts produced in this geography is having higher value for a specific period. And in that period, Asian processor buy southern crop at premium price. Whatever price is available, they process it within 3 to 4 months and sell it at needed parity within seasonal window. So for Asian processor, this whole region is 3 to 4 months work. But whereas local processing the geography have to buy this all nuts in this high demand time frame, have to process it throughout the year, and then they always have they are always prone to the high risk of price volatility, which we always see in last few years. So processing in this region cannot survive without adequate policy support, because that is the only way to counterpart off-season premium and process in the northern season. Now, though this region is quite competitive on the cost side, their costs are quite comparatively better. So let's have a look on Mozambique processing. So Mozambique processing is profitable, but highly vulnerable to price risk. It's not that they are not making profits, but making a profit as low as $26 or $30 per metric ton can be easily washed away with a small variation of raw cashew nut or kernel price. That have a big impact on their profitability. So Mozambique is the most competitive on processing cost because they have quite a lot of experience. Mozambique also enjoy a very good policy support, which is around 18% export tax, which gives processors a good window to compete with their counterparts. But they have issues with regional policy. And regional policy is specifically the policy in Tanzania. And what happens that sometimes anything happens wrong in Tanzania can affect processing in Mozambique. Like in 2019, when Tanzania decided not to export raw cashew nuts because of some conflicts on the pricing side, the overall impact of it came on a small production in Mozambique, and that inflate the price of raw nuts by $200 per metric ton. So where Mozambican processor was expecting a good year, 2019 as a good year, actually ended up into a havoc, and almost everyone who was in processing actually lost a lot of money that year. So that's how it is very risky on regional policy. So this volatility create boom bust pattern, especially in the high demand period. You see this table on the bottom. That actually is trying to understand what is Mozambique processing economic status vis-a-vis Vietnam and India in purely cost terms, in purely economic terms, and that you see the same type of visuals in each slide for each country. So here, what we are actually comparing, we are looking at the revenue realization. Here we are looking at ASEAN price differential, and we are looking at differential in processing cost. And we can easily see that Mozambique, as compared to Vietnam, realize around $200 less revenues, but as compared to India, $660 less revenue. And that easily say everything about it. Though because of a good policy, still they are able to buy ASEAN at cheap prices, as cheap as $376 as compared to Vietnam, and $556 as compared to India. So when we say here competitive prices, we always talk about average price of India, average price of Vietnam, not what they purchase from Mozambique. So overall processing economic status for Mozambique, you see, they're a bit better off with Vietnam, but they are quite far with India. But they are in a very risky geography. Let's have a look on Tanzania processing. With its high quality nuts and reasonable export tax on raw cashew nut is not yet competitive. And the main reason for negative profits for Tanzania processing is the lowest gross margin in Africa, because this is due to extremely high price of raw cashew nuts for processors. Because processors are not allowed to buy directly from the farmers, they have to compete in open bidding system with their exporters, and that's the main cause of issues with cashew processing, negative profits in Nigeria. Though Nigeria are doing quite good on the cost of processing. They secure their most second cost-effective processing in Africa. There's a specific quality with Tanzania. Tanzania are in quality with this color, quite whitish color, heavy premium in India. So India can always pay a premium to this crop, and Vietnam also pay a premium for the better yield and easy processing because you see that they can. So they are best positions on revenue realization on processing. When we are processing, if you see that here as compared to any other country, as high as $1,450 per metric ton, that's a revenue realization in Tanzania. It's quite impressive because Tanzanian nuts actually gives high value kernels. You have very less scraps. You have a very big percentage of 240s and 210. You hardly have 450s, and then scorched and others lower grades. You will see a very low percentage, and that's all together actually help a process to have a better revenue realization. And that is very much seen in the table below. We can easily see that on revenue realization, they are very much near to Vietnam and still far below as compared to India. On ASEAN pricing side, you see the differential is only $41 in Vietnam, whereas in India is only $21. If you see compared with Mozambique, we saw a difference of $200, $250, big difference. And when we see the processing economic status, in both the cases, they are lag behind around $150 to $200 negative. And that's the main cause of Tanzania. So let's have a look on the West Africa. West Africa, we call now these days the cashew continent actually. So we are 45% of the production is coming up, have big prospects of the growth. Processing is emerging in. There's a big momentum on the investment side. So let's have a look on different countries in West Africa, how they're performing. So let's see Cote d'Ivoire. So currently Cote d'Ivoire processing have best economics with highest net profits in the world. And that's something which actually everyone can see by looking at the investments which are happening day-to-day basis in that country. They are not very cost competitive in terms of on the costing side. Their cost is the highest in West Africa. But good thing is they're also highest. They are also having the highest gross margin, around 41 to 42% gross margins. That's good enough to neutralize its high processing cost impact. And this high gross margins is just came because that's thanks to the completely regulated arsenal market. The reforms which have been done in Cote d'Ivoire. There are locational tax and other export costs that made locational price quite competitive for local processing, and that's actually is a big impact. That's a big thing which brings, which help them to have high gross margins. But on the other hand, besides the high gross margin, they also have some sort of cash subsidy, around 400 CFA per kilogram of kernel exported. And that actually helped two ways. That increased their revenue side. At the same time, that actually help an investor to quickly scale up the processing. It's not that you do install capacity of 10,000 metric ton and first year you're processing only 3,000. That changed completely with this, because investors try to see that if I'm putting a 15,000 metric ton plant, I must do 10,000 in year one. So 67% utilization rate in year one, which if we see in the past, we never had year one more than 40% utilization rate. So this type of is helping in different ways. When we see the processing economic status, it's always better of $100 to $150 as compared to India and Vietnam. And more majority of it comes from ASEAN price. It's a big differential, $450 to $630 factory gate price. That's because of the policy. And that's how we can see why Cote d'Ivoire is different from any other part of the world. Whereas Ghana, if we see, that's a non-regulated raw cashew nut market with no export tax on raw cashew nut, and that made that country the most desirable origin for exports of raw cashew nuts. Though Ghana is quite good on cost of processing, they have the lowest cost of processing in West Africa. Their financial costs are higher, not because it's higher rate of interest, but due to the financing of accumulated losses, because these projections are made on the year 3 projections. Processing break-even volumes are very high, which is around 12,000 metric ton, which is second highest after Tanzania. And the Ghana policy environment, actually, if you see, that only favors ASEAN trade. Relatively higher ASEAN price, and that makes processing gross margin as low as India. That's the main issue with Ghana processing. That also increase. And then say the other thing is the regional policies. If you see the regional policy here, that imposes a big pressure on its raw nut price. It is a region with high volatility. Like Cote d'Ivoire is exactly the same case of the Tanzania versus Mozambique. So Cote d'Ivoire with highest support to processing, big export tax, big relatively bigger export costs. There, Ghana is just no export tax and relatively cheaper on export side, make it an exporter heaven, where most of the exporters comes, try to pull as much as possible nuts from the countries along the border side to push more nuts from those countries and export from Ghana, actually. So if you see Ghana actual production, is not more than 40% of actual exported volumes. If you see their processing economic status, that's more or less they are at par with India and Vietnam. But when we say that this difference is $30 or $18 plus or minus, these numbers are too small numbers, and that makes the processing quite risky actually, because this can be washed away with any fluctuation in ASEAN price or current markets. That's making it quite risky. Let's have a look on the Benin processing. Benin processing is profitable, but with quite low profits. And those low profits are not good enough to cover market volatility risk. And one of the major reasons for Benin have two policy implications and one quality implication. So Benin nuts have a premium in Indian markets due to its whitish in color. So they secure a good premium price from $100 to $150 differential from Indian markets. Even Indian consumer pay that premium, but that premium is not in international markets. No one see Benin nuts in a different way. There's no more premium to those kernels if it is coming from the Benin, and that allows India to go bullish to buy raw cashew nuts. And second regional policy implication is that when importer really see a big policy reform, a big import cost, if they import nuts from Cote d'Ivoire, they try to go bullish in Benin, try to get as much as possible, increase the price by $150 to $200, and try to import as much as possible from there. Once they finish the Benin part, they try to just get more from other part of the countries. So Benin, in terms of the cost, they are quite competitive. Not so, on the cost side on this model, you will not see big difference. You will see a difference of 25 to 35 or $40, and that's maximum things you will see. Only in case of audio you see a difference of $55 $60, but rest of the countries are varying from $35 to $45 difference here. Benin gross margins reached a big fluctuation, 35%, sometimes a boom, sometimes a bust situation. And on the one major thing in Benin is that Benin rotational market is quite fragmented. You find thousands and thousands of intermediators, traders who are working with farmers and trading this precious nuts. And if you see the intermediary cost in the region, Benin actually have the highest intermediary cost, which actually vary from 9 to 11% of the actual value of the processing of the value of the nuts. And when we say there's a moderate export tax on raw cashew nut, but that's not big enough to actually put Benin processing at ease and can give them that confidence so that process can go bullish on the volumes and make a good business case. So looking at processing economic status, they are again they are on negative side in both the countries, India, Vietnam, from $50 to $100 negative. And we can easily see why the difference comes in how India can go easily more bullish and can spend more $100 directly on here and almost $100 differential from other countries. Nigeria processing is like Benin on gross margin fluctuations, but relatively better on processing economics. So Nigeria is quite dicey. Sometimes it's really doing quite good. 2018, 2019, 20 processing economics is quite great. 2017 was a big disaster. 2016 was a big disaster. And hopefully to 2021 also is going to keep a lot of pressure on the processing economics. The main reason is that the processing in Cote d'Ivoire in Nigeria have least policy support. And that is highly risky in high demand period. There is a provision which we call EG, export expansion grant, but that's too hard to realize. That is there. People always say that grant is there, but it can take me 3, 4, 5 years to actually realize that grant. So that's the main actually issue with the processing in Nigeria. The second big issue in Nigeria is the lowest revenue realization. If we see Nigerian quality, they have the lower quality nuts as comparative in the region. They have a very specific attribute to their nuts, which is the lower peelability, and that actually have low yields, but at the same time also high percentage of lower weights. Not all the cashew producing regions in Nigeria they are having the same type of impact. Like Okomosho, the quality is good, the peelability is better, it's very near to the port, so that favors all the time traders. If you really, as a process, you want to compete to get those nuts, you have to compete around $150 and $200 additional. You have to pay for those nuts, and that you have to accommodate in your processing economics. That's how you see the impact. Or if you go for other regions like Kogi, some regions like Ida and Momi, there the quality you find that you have quite high percentage of nuts with the spotted. You have quite a big issue with peelability. And when you're processing, you see some specific grades which are coming out, which we call shriveled kernel, CW. CW is only coming from Nigeria. Sometimes it varies from 7 to as low as 7% and as high as 9%. That's the main reason why it impacts the utilization is quite low as compared to other parts like $100, $150 lower than other countries in West Africa. And this risk increase in high demand period. Though when we see just on economic status, it is much better on as compared to Vietnam, but a lag behind when we compare it with India. And if you see here revenue realization, can you see like $741 less revenue realization per metric ton of RCN processed as compared to India. So we can understand that how it's difficult to make processing profitable in high demand period. In low demand period, there's not a big issue because in low demand period, it's very hard for Nigeria to sell their nuts. So you have a privilege to buy nuts quite cheap. And Guinea Bissau processing economics, that is actually well supported with high revenue realization and moderate cost of processing. So Guinea Bissau is a country which have the highest outturn in Africa, fantastic yields, around 45% of the kernels, though small in size, but realize relatively good revenue. Their cost of processing is also quite competitive in African context. And export tax on, there's export tax on raw cashew nut that's actually support relatively good gross margins. They have consistent ports, very high transport cost that also favors local processing. The country political situation and access to finance are two major constraints for processing investments there. And electricity cost is quite high. But if we see then the processing economic status, you will see that they are quite good as compared to India and Vietnam. So that's Guinea Bissau. Let's have a look on overall African processing competitiveness in economic term. That is improving, but still within risky levels. So what we did here, we actually add Burkina Faso, Senegal, and Togo, and saw that how these countries' economic performance vis-a-vis India and Vietnam. Still, we see a lot of red cells. Though we start looking some positive scenario, some countries like Cote d'Ivoire, quite good. Guinea Bissau is doing good. Nigeria can be good if they get little support. Benin case is a bit tough. They need to actually come up with right things. So what we did here, we put up some core factors to boost economic performance with each country. For example, let's say Mozambique. So if Mozambique work on the quality of nuts, if they improve the quality of nuts, they actually come up with their regional policy problem. If they sit with their counterparts in Tanzania and come up with a much more uniform regional policy, and they continue with local processing policy support, I think they will improve on their economic performance. Tanzania is much simple. If they allow processors to directly link with farmer, if processor can buy directly from the farmer, that actually make a big difference. That's sometimes is $220, $240 difference, and that's quite good to bring back, to bring processing back in Tanzania. I think it's not something which is complicated. I don't know why it is complicated. Cote d'Ivoire, pretty good. Only issue is that they have to make sure that how to sustain existing support for needed time frame. It's not that after 2 years the country will not be able to continue this support. They have to make sure that they keep this support till industry is fortified, and they have to communicate it in a real time. Same thing when we say Ghana, Benin, Ghana again, there's no policy, so they have to think about whether they would like to process or not. If they want to process, they have to think about policy, which reforms which should be conducive to the processing. Benin, adjust policy to break even for solution. Yes, there is some policy, so we have to improvise a bit on the policy so that it can bring back this confidence, so the processor actually reactivate their volumes again. Nigeria, we have to work on raw mat quality, think about supportive policies, and something like not just EEG, it's just easy to realize. Guinea Bissau, political stability, access to finance and power solutions will definitely help. And Burkina Faso, Senegal, Togo, all places we talk about enhanced policy support and quality of nuts and direct farmer linkage will be helpful. Let's have the last part of this topic, Indian Vietnam. When we see Indian processing economics, They are the best, definitely, but they are the best to the extent of the size of their overprotected local markets. Well, the size is quite big, and they are almost 40%, consume 40% of the global production. So up to that extent, they will be cost effective. You can easily see Indian processing revenue realization around 20 to 22% higher than anyone else. And that's their most competitive bid. Though their average locational costs are also proportionally high, but still that's allowed them to have a very big revenue realization, and they always remain within a comfortable profit without risk. They are always focused on high quality. Processing costs are not too competitive. They are very similar to African processing. When we say Indian processing, they lost completely its competitive position for export markets. They are no more competitive on exporting on the export market or on that level of prices. Indian consumers pay a premium on extra white kernel, and that's a very specific thing, and that actually is creating some pressure on Benin and Tanzania nuts. This is good for farmers in these kind of geographies, but I think this is something which other market have to, US European market or the market have to understand why Indian consumers are paying this quality, and is it possible to have accommodate that type of premium in their market segment? They are the best. They have the best liquidity, short-term inventories, and that's why least risky. And Indian cost of processing around $175 more than Vietnam. So India is doing quite good. Now Vietnam, when we say Vietnam is the most, we always say, whenever we say most cost effective, that's Vietnam. They are quite good on cost efficient processor and the most resilient players. So resiliency is another thing. Sometimes we like Benin processors are making profit, but they are not resilient, and that's why they always, suffer to perception of risk. Sometimes it's not risk, but perception of risk because of resiliency issues. Vietnam industry have the lowest gross margin and still they survive. Though they make small profits, but on unit basis, but because of their scale, those profits are good enough for a business. Direct cost can be as low as $120 to $135, and when you have big capacities, which is more than 20,000 metric tons, where most of the processing scale in Vietnam is of that level. So Vietnam, with their risk-taking capacity, they actually lead the ASEAN as well as kernel prices. So growing Chinese market actually improved their liquidity as well as average kernel price, and we see that the further growth in Chinese market will strengthen their position. Good thing in Vietnam is that Vietnam's survival strategy is quite unique. There's always a solution. Every year you see there's a lot of changes in the processing. They're quite good. They're quite adaptive, and that's how they make the business case. And there's a unique thing in Vietnam that they use their toll processing facilities, which we can say as satellite units, but not exactly the satellite units which we are having in Africa. These satellite units in Vietnam are the excellence centers, who help you to reduce your processing cost, your processing dynamics. So those are not just merely some closed plant which someone wants to utilize at toll processing. Those are actually excellence centers, actually, where the cost of processing always is smaller than the central plant. So that's more or less on the economic part of this. I think I will take a small pause here and invite, and then the second part will talk after some questions from my friend.
Thank you very much, Shakti Pal. It has been a very detailed session, and as you rightly mentioned, it's a technical session, so we want to be sure that we give all the technical information in there and then go as precise as possible. But at first, there are a couple of questions that are on this, on Zoom and also on other platforms. But the first one that I'm going to take has to do with the assumptions and also the capacities you have used in the estimations. Jean-Francois had asked also about what happens to those factories that are operating between 1,000 metric tons and 3,000 metric tons. Are they not part of this assessment or analysis that has been done? Or what kind of analysis can you make out of this in terms of profitability and survival and other parameters? But again, tied to that is also another question I was asking. You have assumed 80% capacity for the analysis that has been done, 80% capacity utilization, actually. Is it real? And the person is saying that probably in Africa, you're finding more, even if the factories are set up for 10,000 and whatnot, you're finding more capacity utilization in the range of 3,000 and, in the range of 30 and 50%. So 30 to 50% capacity utilization. And how does that affect the analysis that you have done so far?
Okay, thank you. I think on the first question, when we say what we do with the plants on 1,000 or 3,000, what I can say when we say 1,000 metric ton plants, that is a bit tough to survive. But on 3,000 metric ton, yes, there's some possibilities, because it is not that 3,000 ton metric ton plant means someone already had invested into installations, and they have to now come up with the solutions. Like as I said, in Vietnam, they always have a solution. So in Africa also, if you have the right policy support, I can say you always have a solution. So you actually have to see that if you have a 3,000 metric ton plant, you have to check whether your management cost actually is the same proportion of which correspond to the 3,000 metric ton capacity plant. Sometimes we hire very low profile management, which actually increase our performance risk, or sometimes we hire very expensive, which doesn't suit to that scale. Definitely there is a need of going for more mechanization. So more mechanization is one of the key which have to come into, because we have the old plants, so sometimes we buy one machine and sometimes we buy another machine. But if we really want to go for more mechanization, which can actually in real term can reduce the labor force, there is a need of automation, and automation require some scale. So on 3,000, still you can come up with some adequate scale, some adequate automation. So there are some solutions, but for 1,000 and smaller capacities, is a bit tough one actually. Maybe in a family sector that can have some little oxygen, specifically if those plants are in specific country, which are well protected, like Cote D'Ivoire is well protected. Now, when I say the second question on utilization, or maybe when we say small plant, definitely you can always think about going for specialty markets, because small plant have much more capacity to go for directly to the farmers and can have better farmer linkage. So can go for organic or free trade. There are niche, but for example, organic is no more niche these days. It's very much coming up nicely, very good prospects for long term. So those are the, I think, possible solutions. And I think each case will have its own formula how to make it I think much more economically viable. On utilization rate, I see the utilization rate is not a problem. It is a problem when that specific country is not providing you enough cushion where you get the confidence to actually buy that much of quantity. For example, if you are in Benin, you always have a capacity of 20,000 metric ton, but you are always scared because you are prone to big, high, price risk. So you try not to process too much so that you will not get big losses. It's not all that, because your profits are so small and you are afraid of small fluctuations, because your cushion is not that big. So but if you see in case of Cote d'Ivoire is the best case actually, because Cote d'Ivoire allows you to have enough cushion that gives you confident that no matter what fluctuations comes, you will survive. And then you see that every single investments who are coming in, they are getting utilization rate 70% year one. And that never happened in last 20 years. Last 3 years, I see every year people put up a 15,000 metric ton plant, and year one they process 9,000 or 10,000. Year two they go for 14,000. That is also happening in Nigeria. That happens in 2019 to 2020, where we saw utilization rate actually reach up to 90-95%. But now, will they continue the same in 2021 in Nigeria? Not. But will they continue the same in Cote d'Ivoire? Definitely yes.
Thank you very much, Shakti. The next question talks about the investments per plant, which is far lower in India and Vietnam compared to Africa. And the questioner wants to know whether it is largely on account of the equipment costs. And if so, is it also the next drive for Africa to try and see how they can set up more equipment manufacturing hubs on the continent? I mean, we have seen the example also of Cote d'Ivoire in that direction. And what's your thought on that?
So it's not only just on, it's a composite package, you know. Definitely the equipments are far cheaper in those geographies. And the biggest part where actually they save a lot of money is the warehousing capacity. They need not to actually have a warehouse of 10,000 metric ton when they process 10,000. They usually have 2,000 metric ton warehousing capacity for 10,000. In Africa, we have to have at least 8,000 metric ton warehousing capacity. So construction cost is quite high, and so that is a big saving for India and Vietnam. When we say equipment cost, that's also almost half of the price in both the places. Like I know when we ask quotation of a deshelling line, to us it comes up $45,000 minimum, and where in the local processing it goes to $28,000. You know, so those type of differences are there. That will remain. In the short term. We will not see anything different. You know, because Africa, if it is, you know, even if we allow African countries to buy from each other, that will not actually impact much, because West Africa is having the same season. So it is very hard to reduce those. Maybe in coming 10 years, when countries like Cote d'Ivoire or West Africa as a hub start thinking about manufacturing of local equipments, because there's that type of market is coming up, then there's a possibility to reduce this differential.
Okay. Shakti, now let's delve a bit deep in the when you talk about Cote d'Ivoire, and obviously the best example of processing on the African continent. And it is very obvious what the reforms have achieved, and the fact that the reforms are actually working. So the question here is more on what are some of the policy indicators that have gone into the estimations that you did. For instance, what policy measures were taken into account, specific ones taken into account in your estimations, which in your view has contributed to such a high profitability and viability of processing in Cote d'Ivoire. The people are really interested in knowing specific policies and how they have translated into the economics of processing in Cote d'Ivoire.
So the most important part of the reforms was, very first thing, the export tax and export related cost. So when we say export tax, that's not high, but it is the overall cost of exports that comes approximately around $240, $250 per metric ton. And that is actually the biggest thing which impact the gross margins. And if you see, gross margins are the very first thing which every African country looking for, because that actually allowed them to at least accommodate their learning costs, accommodate their first few years profits, lower profits, and survive. So that's one thing. The second thing which they did great is they put up everything, you know, traceable. though it's very hard to put everything traceable, but they did it. So traceability means that if I'm a processor in Cote d'Ivoire, I need not to spend anything on traceability side. It's very easy to have farmer linkage in that geography as compared to any other part of the world. So that actually have a big impact on processing part. Now, because Cote d'Ivoire also is having quite high cost of operation, especially in year one. So in year one and year two, if you see their year one, dynamics, their cost can go as high as $625 per metric ton, and that's very high actually. So what they did, they come up with this export subsidy that actually helped them to artificially increase their revenue for first few years, and by that time, a processor will gain adequate strength and competitivity to keep running the show.
Thank you, Shakti. Let's stay on the policy issue and take quickly East and Southern Africa, where you talked about the case of Mozambique and how it has been impacted on the by regional policies. Here, we need a bit of a clarification. What exactly you mean by regional policies? What kind of regional policies? Where is it coming from? Is it from Tanzania? Is it from Mozambique itself? And then how should governments in these two countries, or even in that area geographically, how should they address these policy issues?
You see, regional policy, let's take an example of Tanzania and Mozambique. Tanzania is very much government in everything, So what happens if you see Mozambican processing, they was doing great from 2001 till 2010, 2011. It was growing faster. They was one of the most, competitive processors in Africa. And because that was because of also that time, Southern supply was not considered as just purely off-season supply. Though that was off-season, but not purely off-season. That was enough to actually compete with. So they find that in recent year, their share of the global production is reduced to 16-17%. So they see an extraordinary pressure from Asian countries to buy that product. But when we say regional policy, now both the governments know, especially Tanzania, they know that that world needs our nuts. Our nuts are good in quality, but at the same time, we are the only supplier who have that much of quantity. So they always have a negotiating power, and they sometimes go very excessive. They use excessive powers on this. And what happened in 2019, where the government become very adamant on the prices. They was asking prices which are quite above of market prices, and everyone thought, okay, even at this prices, no one is going to make any money. And at last, Tanzania decided not to export any nuts in 2019. Nothing has been exported. But can you imagine that in a time frame where the world is expecting 260, 270, or 300,000 metric ton, and 250,000 metric ton is not coming out, then this whole pressure went to this small supply of 50,000 metric ton from Mozambique. So that actually artificially inflated the price around $200, $250. So this 50,000 metric ton is what? Just not less than, it's just less than 10 days processing in Vietnam, So that have no impact at all for Vietnam, but that has a big impact on local industry. And 2019, if you see the pricing trends was great. Every processor was very optimistic that 2019 will be a great year. And because of the two different diverse set of regional policies, they actually got a victim because of the Tanzania move. So that's where there's a need to synchronize your policies with governments. We should talk with each other. We should not see just B as B. The same thing is a case of Ghana and Cote d'Ivoire. So and Benin actually victimized because of Cote d'Ivoire policy, or maybe we can say that not everyone can bring such policies in each country. So you always see a counter impact of policies, great policies on the neighbor which have almost no policies or have a different type of policy.
Thank you very much, Shakti. There are 3 more questions, and then we go back to the Boma Kernel presentation. But the next of those 3 is more asking, you talked about short-term inventories in Vietnam and India, and which, in your view, maybe I think later on other slides, you also talked about the fact that it then has a lower price risk because then you don't have to hold stock over a certain long horizon as you find in Africa, where if somebody has a need for, let's say, 1,000 metric tons, he needs to buy the 1,000 metric tons at the start probably of the season and hold it pretty much for the whole year and release gradually until it is all sold off. So it means that there's a whole high level of inventory holding. And now the question is asking, how does that play into the viability of processing in Africa? This whole need to lock up stock for a long period vis-a-vis the situation in India and Vietnam, where they hold short-term inventories. In your estimation of viability, or even let's say the internal rate of return estimates, how does this play into it?
In Africa, if you see that, well, academically it is possible, but if you see economical feasibility, that doesn't make any sense, because exporting from West Africa to Eastern Southern Africa costs much than we are exporting from Africa to Vietnam or to India. Now, when we say West Africa region, which 45% of the production come in the same time region, that actually means that doesn't allow to actually have this privilege to have short-term buying. You can have 1 or 2 months differential, that if you are a processor in Cote D'Ivoire, you can import some 1 month or 2 month inventories from Guinea Bissau, but that doesn't make any sense because of the cost of transport. So in it, like Africa will never be able to import anything from India or Vietnam. They are in the same geography. The majority of the production comes from the same geography. So northern crop is having 85% of, 82% of the crop actually is northern crop, which actually produces 4 or 5 months, and majority of African countries fall into that geography. So it is very tough to realize this stream, but that is not needed actually. What is really needed, that Africa have to, very first thing that African government has to think about, whether they really would like to see processing in the country. Because they start from the government. Like they have to dream. If they want to go for it, then just go for it. Come up with the right solution. It is not that you are a doctor and you see a patient of.
I don't think you talked about. Hello, Shakti. You want to say something? Hello? Please go ahead.
Yeah. So what I'm saying that it's the government actually who have to start with this, that whether they would like to process or not. So if you bring the right policy, and if you have the right scale from the beginning, and give the enough time to incubate these investments, I think that's the way forward for Africa. I don't think so that Africa will ever be able to think about importing from Eastern Southern Africa and have these short-term inventories, because India and Vietnam will always be there.
Thank you very much, Shakti. I don't think you talked about the satellite sharing in Cote D'Ivoire, but then you might have you had mentioned Vietnamese satellites, and the question is, they want more clarification. What is it about, and and then I will say, how does it compare with the satellite sharing that is going on also in Cote D'Ivoire?
You see, in Africa, when we see satellite, usually we see, oh, there are 2 small factories close nearby, and we try to use those facilities for some purpose. And many times it is because we try to help them, and we didn't see much more, economic advantage in it. Sometimes we try to escape from the law that, okay, in place of hiring 500 workers in one place, I am going to put 200 workers as outsourced processing, So this is the mindset when we see our processing model in Africa. And that not necessarily is going to reduce your cost. That actually is going to increase your cost. But your actual problem is the cost. So you're not actually addressing your problem. You are just trying to accommodate something for maybe political reason or for maybe social reason in your work system, and try to make some sense out of it. Where Vietnam is not because the factory is closed. Vietnam means they actually consolidated different segments. Small processing plants who never get success, they thought, okay, in place of doing everything, I just do deshelling, but I will do deshelling of 30 tons or 40 tons per day. So my whole bread and butter is 40 tons processing, giving 91% holes, and within this economic framework. And that's their own bread and butter. So they are not too small, they are very focused. They are center of excellence rather than just a satellite plant. And I think we have to change the definition of satellite plant. And we have to just ask this question: is this plant is a center of excellence? Do they know what they are doing? Or I am just there to teach them and try to, where I am myself is learning, you know? And so these are the things which we have to take care when we are talking about satellite plants and accommodating them into our ecosystem.
Yeah, thank you. So before we move on to the Burma Canal exports and emerging trends, the last question here, and let me just try and read it. It will seem policy is a key driver of processing in Africa, and focus should be on two key policies. One, tax on RCN exports, and then two, minimum price of RCN to processors. And the question then is that, what is the danger in this kind of a policy recipe?
When I say minimum price, I don't understand minimum price, but what I understand, export tax, I understand. And export tax, you know, you have to be intelligent enough. You know, if you, for example, let's say Senegal or Gambia. Gambia production is maybe 15,000 metric ton. Should they think about to process in Gambia? And should they actually come up with export tax, which will disincentivize the farmers, and they will never grow cashews? Do we want to see that? Or we see Cote d'Ivoire, who produce 800,000 metric ton, and they are just only at the mercy of India and Vietnam? Or do they just sit together and just think only about farmers, and where they know that they have congested ports, more and more production will not be, they will not be able to actually sustain, the infrastructure will not sustain that growth, and they just sit doing nothing about processing. So both cases are different, where Cote d'Ivoire should think about processing, and they think about it, and they just bring the right thing. They see the problem, they see the scale of the problem, and they come up with a solution, which is not just a solution, which is a break-even solution. And I think that is the most important part, that African government have to understand what is the break-even solution to that problem. Just having a solution, if it is not break-even, still the industry will remain very volatile.
Thank you very much, Shakti. And please take us through the next session of the presentation.
Okay. So let's talk about a little bit about Burma Canal. Burma Canal is quite a new term for cashew industry, actually. This is an emerging trade between Vietnam and Africa. So what actually is the Burma Canal actually? So Burma Canal are oven-dried kernels. Usually ovens are called Burma in Asian world. In India, everyone say Burma means oven. In Vietnam also people start talking the same terms. And many of our cashew people, they understand Burma kernel, but it is actually oven-dried kernels with peel. That means in our process, this process includes calibration of nuts. We steam the nuts, we deshell the nuts, and then we do the oven treatment. And before peeling, we just pack them as it is and export it to the markets. Today, when we say market is there's only one market, that is Vietnam. Because India actually, they protected their market. They actually prohibits the Burma trade entering into the country because they saw that is a big threat for their local markets. And the local market is the only way to survive in India. So Burma color means it's always Vietnam, and the supplier is Africa and some other countries like Indonesia. Also, they're coming up in Burma color trade. So currently, Burma color trade is growing faster than expected, and we will see that in coming slides. Approximately 7 countries are currently participating in this trade, where Cote d'Ivoire leads with 60% of overall volume. And there is a reason for it. We will explore that in coming slides. And when we say some sector strategies see this as an opportunity and others as a threat, if this becomes a long-term practice. So when we say opportunity, definitely it's an opportunity in short term if we use it smartly, but that can become a threat if we keep continuing doing it for the long term. That will have some issues with the food safety, traceability, and it will bring a lot of other issues with this. But here we will see only how it is a win-win situation. So some industry experts see this as a win-win for suppliers at origin. When we say suppliers at origin, that means countries who are producing cashews and processing themselves, and an importer in Vietnam. If you see last 3 years, the data shows like 2019, Vietnam imported 31,000 metric tons of kernels. That is equivalent to 224,000 metric tons of raw cashew nuts. In 2020, this number reached to 58,000 metric tons. Wow, what a growth of 89%. That means 203,000 metric tons of raw cashew nut equivalent exported to Vietnam in the raw form, in the Burma kernel form. And if we see the first 3 months, January to March in 2021, almost 18,000 metric tons of cashew kernels, Burma kernels actually exported to Vietnam. And if we just see the same trends, it is expected that Vietnam will import around 78,000 metric tons in 2021. That means it is approximately 300,000 metric tons of raw nuts market, which is going in the form of Burma kernels. And why it is happening actually? What are the basic factors which are supporting this trade? So when we see this increasing export tax on raw cashew nut in Africa, and there are some other favorable policies for local processing, that actually together negatively impacting competitiveness of Asian processing. Here more specifically we talk about Vietnam, because India is not adopting for importing Burma kernel, though they are also impacted with these basic things. Vietnam, as I said in their slide, they are very pragmatic people. They always think about how they will survive tomorrow, and they immediately see that Burma kernel trade can help them to eliminate ASEAN import cost impact and reduce rate. So it's a win for them. At the same time, they see the partial processing, which is you need a lower investments need. You also reducing your performance risk because most of your work you are doing with the machines, which we say deshelling or cooking, or so you don't need too much of workers today because we have adequate technologies to do this for processing, engaged. So we see this as a win for origin too. So when we see economic analysis, so there are increased import cost or taxes and shipping costs are two major drivers. Hello? Can you hear me, Ernest? Hello, Ernest. Hello, Ernest. Hello, Ernest. Can you hear me?
Shakti.
Yes. I can hear you. Blessing, can you hear me? Can anyone tell me, is there any problem from my side?
Please go on.
Okay. So here we are actually talking about what are the gain and pain points of this trade per metric ton of RCN equivalent. So we saw on the gain side is export tax and other taxes on the vocational trade and export subsidy on kernel. So the countries like Cote d'Ivoire, Mozambique, or Guinea Bissau offer good margins for importers. So I'm looking at how an importer see this trade. So for example, they see some savings on the export tax and other taxes. And some countries like Cote d'Ivoire, they actually have a subsidy on the export of Burma kernel, which is around 160 SEPA per kilogram. And that's quite good enough to be in this trade. Second thing is, and that's actually justify why 60% of this trade is from Cote d'Ivoire. Second thing is cost differential in exporting raw cashew nuts versus Burma kernel. So in place of exporting 100 kilograms of nuts, now we are exporting 30 kilograms of kernel. So countries with high foaming cost and high freight offers better economic advantage like Burkina Faso, Nigeria, and Guinea Bissau. On the con side, when we say the pain points are the variation in cost of processing at origin compared to Vietnam. So the smaller the difference is, better it supports the trade, such as Mozambique and Ghana. They qualify for that part, and revenue loss of cashew shell at origin. So at the moment, when we are processing in Africa, we are not actually utilizing cashew shell, and we are not having that revenue, which comes around $67 to $70 per metric ton of gross RCN. So in the short term, this is a loss, but that can actually open up a window because Burma kernel will boost up the processing volumes. That means we are going to have big volumes of cashew shell, and that actually can incentivize to think about processing of cashew shell and make it economically feasible. So we can see into both terms. So today it is a pain, but that can turn into gain once we have the adequate volumes. So this specific chart, if you see this table, that actually shows on the point of view of a importer. Here I try to show, I didn't get a lot of calculations that if I process how much I gain, I will gain something, depends on in which country I am in. But irrespective of my gains as a processor, I would like to see what is the gains for an importer. So here I actually shown what is there for an importer. So the impact of saving of an importer is actually that vary from country to country, origin to origin. And Cote d'Ivoire is the most qualified supplier again. So if we quantify the gains, so we see the first gain on the RCN freight, if imported as raw cashew nut, that's approximately $87. It's not just actually the freight, it is freight plus foaming charges, approximately this in 2020. Now, when we see if the second part, which is kernel freight, if imported as open kernels, and that is around $21. And also there's a difference between on import part that transporting 1 metric ton of nuts versus 30% of the kernel. So you see all this difference, and you see you have a freight gain of $77 from Cote d'Ivoire, $80 from Ghana, Benin, all are approximately same, from $70 to $88 or $90 for each of these countries: Cote d'Ivoire, Benin, Ghana, Nigeria, Burkina, all this country. We can increase the list here. The second gain point, we see the RCN export tax. So if you see the RCN export tax, Cote d'Ivoire, it is not just the tax, it is RCN export tax plus other various taxes all together. That's the export cost actually comes to. And then you have own treatment kernel tax or gains. So these are the gains. Some countries actually have to pay a little on the export side. So if you see the total gain is around $226 in Cote d'Ivoire, Benin, Ghana, all these things. And altogether, Cote d'Ivoire have $303 gain per metric ton of RCN exported into Burma kernel. That is around 183 for Benin, that is 72 for Ghana, and different for different countries. But now if you see the pain points, so we have the additional detailing cost, which is around $4 per metric ton, when we compare it with the mechanized system in Vietnam and in Africa. Additional packing cost around $20, that can be reduced by having big packing, big giant bags, jumbo bags. Now, then additional fixed cost allocation, so additional depreciation altogether we see around $52 to $48 to $55 additional costs in different countries, plus loss of shell revenue, which is around $49 to $50 per metric ton, and that's how our total pains are. And you see the net efficiency bandwidth for formal trade is around $202 for Cote d'Ivoire and minus $25 for Ghana, only $3 for Nigeria, and $133 for Guinea Bissau, and $169 for Mozambique, and so on. So that actually says that higher the taxes on exports of raw cashew nut and shipping costs, better the World Market trade economics are. So countries like Cote d'Ivoire, Mozambique, Guinea Bissau, Benin are reasonably good origin for importing partner in Vietnam. Now Burkina and Nigeria with relatively lower margins. Ghana is not strategically fit to be a lucrative origin for warmer color trade. Origin in low demand due to quality issues or consistent ports like Nigeria, irrespective of negligible gains on importer side taking advantage of warmer color trade. You know, the many of the traders who are trading RCN, they start thinking to become a trader of actually warmer color, and that helps them to actually not expecting everything at the same time when the ports are congested, and take the leverage of the shipping part. And so if you see after Cote d'Ivoire, Nigeria actually is the third biggest country on formal trade in Africa. Importer savings giving a good indication. So that's actually how we get a good indication to see what is there for an importer, and then you calculate your own gain, that okay, how much I will gain from bottom-up approach. Plus, this is a savings, so that means they are saving. So these are economic savings. But then it also, if you are exporting in warmer trade, as a Vietnam importer, his risk is even further going down. He need not to think about financing, because now he is having rotatory financing of government. On a weekly basis, he's buying Burma kernel. He's not paying RCN. He need not to import anything. So if you see his financing cost will go drastically down. That is not actually added here. We can actually go even at those costs. They are risk-free because they are buying every week, they are selling every week. So their inventory further go down from 3 months to 1.5 months, and that actually improve their resiliency. So there are other benefits.
Hello, Shakti.
Yeah.
Hello, Shakti.
Yes.
Can you raise your voice a bit? Yeah. Yeah, very good.
Okay, so what I'm saying that besides these, profits which you saw in this table, an importer actually has some other advantage. For example, if this Vietnam importer, if he's importing only Burma kernel, he need not to have the long-term financing. He's not just there to import raw nuts, so he don't need now 4 months financing. He just need 1.5 month financing to keep paying for Burma kernel. And that also reduces inventories up to 1.5 to 2 months, and that actually help them in reducing his cost, but as well as his risk. So as an importer, it all has good things. And I see more and more Africa is bringing more policy reforms in the form of increasing, export cost in terms of having some export taxes. At the same time, they're getting more and more efficient processing. I see more and more margins for Burma kernel, and that can be used for importers actually as a win-win situation. But we have to think twice when we are doing it, if we are doing it for the long term. If you're doing it that, okay, I'll start with Burma kernel, and after 4 years, I turn myself into a full-fledged processor, that's a great thing. Otherwise, on the market side, we will see a lot of issues, a lot of problems on the traceability side, on the food safety side, and no one knows. Again, the Vietnam keep actually playing with the pricing, and we will never. And the full-fledged processor definitely will have a hit out of this Burma kernel trade. That's it. Thank you.
Thank you very much. Thank you very much, Shakti. Can you hear me, Shakti?
Yes, I can hear you definitely.
Okay, very good. So maybe we can have your video now, and then be able to take the rest of the questions. There are some questions that have to do with the processing economics, but let me start with those to do with the Broma Canals. Here there is Lucia who is saying regarding the Broma Canal trade in Mozambique, it is causing a demotivation for processors who invest in primary processing, and that the price of Broma Canals are far lower than the whole. So it does seem that maybe on the ground they have different realities. And what are your views on this? And what kind of advice would you give to those CIOs?
When we say, if you see the pricing side on the Burma Canal in 2020, in Vietnam, that's around $5.4 to $5.6 a kilogram. And sometimes it's amazingly high, actually. So I think your ability to understand what are the gains for an importer, if you know the window, that's why I predicted that window. So if you know that the importer window is $200, then how much you can negotiate with that. So you have to understand what is in this business for an importer and for me as an exporter. Only then you can negotiate. So it's all about negotiation. And if you see Mozambique window, there's a significant gain around $180 and $70. That's quite big, not small. But the business case in Mozambique will not be for the long term. It can be for 4 months for a small window, because then the northern crop will come in, and then you see a very different type of pricing which comes from Cote d'Ivoire or Nigeria. So because of the Mozambique being in off-season supply country, they always have this price risk. And they have to be at that.
There is also Ayo here who wants to know, from your analysis, it does suggest that Nigeria, Ghana, and Burkina Faso should not consider going into Broma Canals at all. What are your views on that? Yes. Is it? No,
it's not. It's not like. It's not. I'm not concluding on that you not. But he said that you see the margins. If those margins are there, then still it's very risky. So why you would like to think tied your hands with something which are small origins where the transport actually is quite challenging, and same type of profits you get into mainstream processing. So why Burma? Why not mainstream? So you have to see in that perspective. Countries like Cote d'Ivoire or countries with high export tax, yes, that makes a sense, because that motivate an importer. So here the motivation of importer is very much needed, because importers see, well, here I'm getting $200. Even I give $100 extra to my supplier, still I have $100 gain, and I need to have long-term financing. I reduce my risk too. So those type of things. So we have to be careful when we are doing with very low margins, whether we should go for Burma or full-fledged processing.
Okay, so stay there with also the Cote d'Ivoire scenario and what makes Broma Canal processing profitable. Because Peter Tom is saying subsidy on RCN price in Cote d'Ivoire is based on the full local processing, and he's asking how should subsidy be adjusted, indeed reduced, on Broma Canal processing in view of lower job creation. Because I mean, as we go to truncating the mainstream full processing and then only producing Broma Canals in the end, it means that jobs are being sacrificed. And what your thoughts are on that?
As I said, Burma Canal is going to definitely give some trouble to full-fledged processor, because with Burma Canal, what we are trying to do, we are actually trying to eliminate that impact of export products. So a processor who is doing Burma Canal, he actually will see he is actually going to reduce his investments. He see quite right profits, and he would like to stick with this, and he will definitely compete better on the RCN side. And that's what but the risk is that there's only one buyer. There's only one buyer, that's Vietnam, that's it. So that's the risk associated with it. But the mainstream processor definitely will have hard time with when he is going to compare himself with a Borma kernel processor, because Borma kernel processor in the short term is much better option as compared to the if you say it in the long term, it's not a better option. For the short term, it will definitely give some trouble to like people will not get too motivated that why I should invest into peeling and grading and other things when even exporting Borma kernel there is a subsidy, you know. So, but volumes can come for a country like Cote D'Ivoire that's so big. They can see it in a different window. Also, they can say, well, today we are not having any revenue from cashew shell, but the Borma kernel can actually bring an exponential growth in processing, so that within few years we are going to have thousands and thousands of tons of shell, and that will allow us to use cashew shell effectively, and we will be able to actually explore $70 or $80 additional revenue from cashew shell. So there are various ways to see this. I think there is a need to do more work on it. I always say that still it's too early, but we need to actually work with more, come up with the different things that what are the contractual terms. If you are in Borma trade, then you as a processor, what you should take care, how you should define your will be price, and how you come up that, okay, what I'm getting as a price is the right price or not. So there are a lot of work we still have to be done. I think in coming months, we will come up with some more lights on those issues.
Yeah. Thank you, Shakti. There's a question on price, but I want you to take it in a different way. Recently, Vietnam, in the last 3 years, they have come into the Borma kernel market, and then we have seen tremendous growth over the last 3 years, and we are even projecting it to continue for this year as well. What has been the price trend? Has it been really commensurate with the growth in the demand, or it hasn't come out in a proper way?
So you see, once you should be smart enough, you should know, again, your partners, you should know the bandwidth in the trade. So once you know that, you actually sell at the right price. And people are selling at the right price. And that's why this growth is there. The growth is not small growth. From 124 tons to 300,000 metric tons within 3 years span, that shows that people who are engaged in business are well motivated. They see the markets, they see the potential, they see lower price risk, they see lower investments, they see even lower performance risk. And that's why this thing is actually happening. Some people, they don't know how to do that, maybe because of your scale, or because you want to just try 2 containers. So trying 2 containers, you can see only its viability, that it works. But that's not maybe good enough to just work well on your pricing strategy. Your pricing strategy, once you know this type of table, which we've shown, that is a very decisive thing when you are coming up with your pricing. You have to just make sure that you really compete on all these terms. You have enough bandwidth, you have enough cushion to continue this trade.
Shakti, we have seen the economics of processing, that is the mainstream. We have also seen the analysis you have done for the Borma kernels. And Peter Tom's question is going more along the lines of what is the difference in overall cost price, percentage-wise, between food processing or mainstream processing and also Borma kernel processing. So some kind of comparison in the economics of both, in terms of being able to make a decision, granted the market is there, and granted the price is what we anticipate it to be, whether to go into mainstream processing or into the market, especially for a new entrant.
So you see that if you compare the costing, Borma kernel processing costs are approximately 36 to 37% of overall cost actually. Okay, if you are shipping your Borma kernel into a bulk pack, If you are shipping it into a small pack, that increase $7-8. So we can say around 40% to 42% overall cost actually up to Burma. So majority of the actually cost comes after Burma. Till Burma, most of the operations are done with machines. You can use a bit of automation so that you can increase the capacity, and that actually helps in mitigating the cost structure. So cost structure around 40 to 45% when compared to overall. So that's, I think, gives you an indication how you come with your costing.
Okay, thank you very much. Now I go back to the mainstream processing questions. We still have a few we haven't touched on. There are, first of all, there is Valentine talking about the export of Burma kernel and other forms of kernel into India, which is possible with Togo. And the situation is true because Togo is considered as a least developing country. So they have an LDC waiver which allows them to export into India. But it is also not the case for most of the countries that we are dealing with, as they are not in that category of least developed countries here. But then Ashwin wanted to know the processing revenues for the mainstream, which we have presented earlier, whether those revenues are based on ex-factory or on FOB. And let's take that question again with another questioner who also wants to know whether where the factory is sited is critical in this, whether the factory was sited in the production area as against, let's say, towards the port, whether it makes such a big difference in terms of cost and viability.
Yeah, so the first question about the Burma color imports through some special provisions. Yes, there are always some special provisions, but in India, India is quite flexible on import policies. When these special provisions are used by some countries like LDC norms, the CPC, which is Cashew Export Promotion Council of India, they always notice those things. And when they say that if it is just very small quantity, maybe people don't see it. But today, because industries are very competitive in nature, they always come up with this, and even they ban it. They question that thing because of the local industry support, especially nowadays when we are actually suffering a lot of issues with the local industry, and where there's a lot of support coming to make sure that industries are actually doing good. And so in those countries, the provisions remains as provisions. Like we have a lot of ECOWAS provisions, but not we cannot implement them in ECOWAS region. Like if we want to buy, I can buy as a processor nuts from Cote D'Ivoire without paying taxes in Burkina Faso to process. But how you actually, is it functional? It is not functional actually. So there's a functionality and there's a law. We can use that, but it always have lots of if and buts that makes the business a bit tough. Second thing is when we say the FOB, these revenues, these are FOB revenues that overall what factory received as metric ton. Some of the revenues when we say Cote d'Ivoire, that include the subsidy, and others are where there is a subsidy, so those are inclusive. And in India, revenues are actually as per 95% local market and others, and also include your CNSL and byproduct revenues for India and Vietnam both. And I think the third question is where we have to be situated, So there are two things, Very first thing depends on your scale. It's always better that if you are very new to the production zones, it's always a good thing. But if your capacities are big, then you have to also make sure that you have adequate infrastructure so that you can place right sort of management. But the biggest trouble comes in that you say, I will go for 30,000 metric ton plant into a small village. The problem is then where you will bring the adequate management who stay in that village. So that always become a big issue. And you need high qualified people. It's very hard to motivate people and to make sure that they actually remain in these geographies. That's a tough thing. But once we have a moderate sort of town for such investments, we can be a little bit far, but not too far. For example, in Cote d'Ivoire, you can think to be in Abidjan, but then your losses are quite big. So it's always better that you all go for up country. But will you go to a place like Bundiali to have a very big plant? It's not that easy. Maybe in Korogo, yes, because in Korogo you have an airport, you have access to the people who are actually managing it, because the scale is different. You can actually maintain the management there. At the same time, you have enough workforce in that place. In small villages, usually you see farmers who have enough land and big plot size. They are not that motivated to work in the factories.
Thank you very much, Shakti. Before we go, there is also Ashwin and also Dulat. They are raising issues on the point of view of the farmer, and more or less, if you look at the fact that the same nut is going into or getting to India at $1,300 and the farmer is getting $700. I think it is not the scope of your presentation today, but let me say that we will be looking also much later at the economics of cashew production, and then to see what prices farmers are getting and what percentage is going to each actor along the value chain, because there are also traders and other actors, also even shipment costs and the rest, transportation, all the way before it gets to processor in India. So we'll be looking at that, and then to see whether indeed farmers are getting the right price or not. I know it's a very tricky issue, but we will deal with it in the course of time. So Shakti, before you go, maybe one last question is, or rather your advice to new entrants into the African processing sector, and how they can, or what kind of consideration they should have in mind as they take that key decision to set up a factory in Africa, because we know scale matters, and that is essentially what you have told us. So,
Ernest? Can you hear me, Ernest? Hello, Ernest? Hello, Ernest? Can you hear me?
hello, Shakti.
Can you hear me?
You might not have heard what I said, because I think the internet might have hung at one point or the other. So I'm saying that before we end the session, we want to get your advice to particularly new entrants who are coming into the cashew sector, because we are getting more and more investments coming into Africa these days. So the advice to them, because your presentation has shown that scale matters, and that choosing the right scale, choosing the right processing technologies, and the rest are very critical in ensuring viability at the end of the day. So your advice, so that we have the right kind of technology mix and right scale being introduced onto the continent.
There are two things. One is for the governments, and other is for the private sector. It starts from the governments, because private sector have its limitations when he talk about competing with their counterparts. They can compete up to the extent of the business competitiveness. They cannot actually respond to the extra additional competitiveness which comes from the policy side. So it is not necessary that every country who produce cashews have to be processor. It is not necessary. I think the government starts thinking about it, and they have to make their mind clear that what they actually would like to do with the nuts, whether they go for just on the production model, or they would like to go for processing and in the long term. So, but once they decide about processing, then they have to understand for processing to be viable, this things have to be in place, and that has to be in place. The shortcuts will not help. Sometimes these shortcuts actually is much more destructive, because many investors come into this geography looking at, oh, there is a small export tax on it, and they're going to make it, but then they fall into this artificial perception of risk. They install the capacity, and then they always fearful that if something goes wrong with the prices, it is expected that price will go down. And where they were supposed to process 10,000 metric ton, they ended up buying only 5,000 metric ton. And that is because the country is not deciding perfectly what they are looking for. If they will go for it, they will go for it. Like Vietnam, they decided we will do the processor that way. They come up with a first 15-year plan. 15-year plan. Can you see? Because there's nothing, there's no shortcuts. You know? So the countries have to come up whether I will go or I will not go, and that's clear. So that will be very helpful for investors to think where they should invest. Now, the second thing on the investor side, when they're choosing where they want to invest in, then they have to understand what is actually the investment scenario look like. Is it for the short term? It is for the medium term. It's for the long term, and that's how they have to come up with their proposed, solution. That okay, I should invest into that type of capacity. So before they invest, they should understand really very well about all prerequisites to be a good investor. What kind of automation, what kind of mechanization, and what kind of automation is necessary to have that, and make sure that they will not underestimate the importance of the management, which is a big trouble in Africa. A 10,000 metric ton plant actually having sometimes a management of 3,000 metric ton plant, that doesn't work it. So, and the third thing is, still now many, most of the processors, they still feel the maintenance of the machine is just a dirty collar job. Why I have to pay a maintenance manager $1,000 salary? That's too much, because they feel these people is around $300, $500 window. But that is not the scenario today. Today, mechanization means the success comes from there. So don't be shy. Don't underestimate the blue collar job, that they are fine with $500. It's not like this. Try to get the right maintenance team in place, and that's and also see your window. Is your window 5 years window, or your 6 year window, or you see your windows 4 years, and that's how you design that, how you are going to achieve your utilization rate as early as possible is much better. Access to finance, other things are again, I think you have to make sure from the very beginning investment that you should have a very good portion of equity. You cannot expect that someone is going to finance you 100% when you are starting your cash process business and you are quite new in this business actually. So these are the things which actually any investor have to really see: where, how, when, management, and the utilization rate.
Thank you very much, Shakti, for the presentation today and for all the explanation you have given. And it is good to acquire this knowledge and to also be prepared and to know what to do when investing on the continent. It is profitable, but we have to invest rightly. Shakti will be coming our way the next section of the technical series sometime next month. He will be talking on suppliers compliance, on key market requirements. So we'll be looking at issues of good manufacturing practice, code of conduct, traceability, among others. So thank you very much, Shakti, for being with us, and we hope to speak to you again in the coming months. So to the rest of you, our participants, thank you so much for staying with us. It's our interest to serve you with the right kind of knowledge in the industry to make sure that you can take the right business decisions. So until we come your way again next month with Shakti, let me also remind you that next week, it will be the session for Jim Fitzpatrick on the markets. So we will have the market session next week, and then Shakti will come your way next month with another topic. So thank you very much, and bye-bye to everyone, and thanks for staying with us. Thank you, Shakti.
Thank you, Ernest. Thanks a lot.
Bye-bye.